I work for Pluto Finance, and we were established over 10 years ago now in the private credit market, and specifically in the private credit real estate market. And over those last 10 years, we've seen a dramatic change in the environment in terms of the less activity of the regulated banks and the growth of the private credit funds. And really, that's where I see the trend evolving. It will continue to be a shift of credit provision from the regulated banks to the private credit markets. In terms of what the private credit market achieves and why it's growing at the pace it is, really it's because they listen to their borrowers, they can structure, they can act with speed. And this is something that I think in the current environment, the regulated banks are finding extremely challenging to do. Fundamentally, they are restricting credit as we hit difficult economic times and reducing their underwriting capacity. And actually, in the current market, what the private credit providers are doing is actually seeing this as an opportunity. Yes, it requires additional structuring. Yes, it requires a lot of work to agree a covenant package and a document that your borrower is satisfied with. But ultimately, this is the time that borrowers are calling upon the private credit providers to deliver. At Pluto Finance, we have about 20 institutional investors that support our business. We run both SMAs and open-ended vehicles. And the challenges are always changing. That's what makes my job, dealing with investors, so interesting. 4 years ago, we were dealing with Brexit and the consequences of Brexit. 2 years ago, we were dealing with the consequences of the COVID outbreak. Obviously, at the moment, everybody is concerned about rising interest rates and rising inflation. And without a doubt, operating in the real estate market, there are significant concerns regarding the impact of rising interest rates and the impacts that will have on capital values. So my challenge is to drill down on the risk with our LPs, complete transparency. They understand our lending, keep the detail to a high level, and explain to them that it's not just the underlying real estate that matters, but the covenant package that you've put into place, the whole documentation, and how you have protected yourself as a lender in that market. And I think it's fair to say we're on our 8th vintage vehicle. We're 10 years into the market. We still have investors with us over that whole period. I think we are managing the current challenges as we have done previously. If I had to pick on one aspect that I would like to see, it would be consistency in ESG reporting. Without a doubt, in our business, every lending decision requires ESG thinking, and I think the private credit market has a role to play in delivering and playing its part in delivering net zero. So yes, we are very much monitoring and reporting on ESG, but what I don't see yet is a consistent methodology for reporting that to investors. And I think the industry needs to develop a more coherent, a more consistent response. Otherwise, we are spending our time reporting on aspects that don't interest investors, when actually what we all should be doing within the private credit industry is reporting on the aspects that are very important within the ESG timeframe to our investors. Well, it's great to be back at the conference. I came to my first Super Return private credit 5 years ago now. I'm still dealing with some of the relationships that I established at that original private credit conference now. So the same stands true today as it did then. It's great to meet investors, particularly existing investors, obviously, but also other new prospective investors. So there's no greater environment, both the formal and the informal solutions for gathering and chatting and talking about industry issues, talking about solutions, hopefully, and the next steps, the innovations, what happens. As ever, I'm speaking tomorrow, so I haven't had my ordeal of being sat within the up on the podium as opposed to in the audience. I'm apprehensive about that, but obviously excited about it, because ultimately at a conference like this you can have that interaction, and the minute the questions start coming from the floor, you know that you are going to be challenged, but that challenge is good. That challenge will be exciting.